Guys, Mike here, Hedge Trading Group, October 9th. The tier trading strategy saved my day. I finished the day red, but it's a manageable red day. If it wasn't for the tier trading strategy that I use and that I teach our members, it could have been a much worse red day for me. Things have certainly slowed down the last 2 days. Okay, yesterday was kind of a funny day with Columbus Day, and it also was the Canadian Thanksgiving. So I kind of expected a slower day yesterday, but today I thought things were going to be better, and it was a little bit better than yesterday, but it's still a lot slower than it's been the last couple of weeks. So I've been in 6th, 7th gear for a while. I have since dropped that down. I'm no longer like pedal to the metal pushing here, guys, because it seems like the momentum and the follow through has slowed down a bit. So I took a couple trades today. I had a few losers, and I'm going to go over those losing trades with you. All of them good setups. Okay, all of them good setups that they just didn't work out. These are the same type of setups that if I see them tomorrow, I'll trade them again tomorrow. You just got to put yourself in high percentage situations, guys. I mean, nothing's going to work 100% of the time. There's no such thing as a pattern that will work 100% of the time. Just doesn't exist. Anyone that tells you they have a foolproof 100% strategy that works every time, and there's a foolproof special pattern that they have that works 100% of the time, just do yourself a favor, never listen or read a single thing that person ever says ever again, because they're full of it. So they're good. They were good setups. They're good patterns. I don't think I necessarily made any mistakes that caused me to make the losing trades. I actually ended up keeping my losses small on those trades because of the tier trading system, and I'm going to go over that and get to that trading action with you now. First, we'll start with PEIX. Was on my watch list here early in the morning. Okay, gapping up here above previous day's high. I really liked this 290 area. We spoke about 290 in chat pre-market. Okay, I take you to a daily chart. I'll show you why I like this level. Okay, here you guys can see this level was previously a little bit of an area of support back in April, a little bit of support here in June. Once that level was broken, it became resistance here at the end of June, and then it became resistance also here in July. So there's some congestion right there around that 290 area. So when we were gapping up above that area pre-market, I was talking about, guys, I'm looking for yesterday's high, which lines up with that area. There's your high yesterday at 290. Looking for the 289 actually, looking for that to hold. Okay, so now as I zoom this in, you guys see we gapped up today above yesterday's high. We pulled in and put in the low of the day, bang, right there at that 290 area. The low was actually 290 even. Okay, so we held the previous day's low, the previous day's high. I also see huge volume. This was a huge volume bar off the open on PEIX, letting me know that there's still some momentum in this stock. Some carryover from the big move it had yesterday afternoon. Okay, and right when I saw that volume off the bell, we held the previous day's high. We started to bounce off that low. I got long right here at 304. Okay, taking my trade announcements on the day. Let me zoom it in. Here you guys can see long PEIX at 304 with stop loss around the 285 area. Okay, that was at 9:34 a.m. And you can see at 9:37 a.m. I took some profit off at 321. Still holding some. This saved my trade. Okay, by me locking in profit on this push right here. The reason why I did that was because we had just cracked through the 200-day moving average on the daily. I expected resistance at that 200-day, so I wanted to make sure I took some profit off the table in case that 200-day did not break. Okay, and we tailed through that 200-day on the daily chart, but we're not able to sustain it. We're not able to keep that move together, and we ended up rolling over and breaking down lower in the day. Ended up selling out of this position around 275 later on in the day, in the morning, right there, the rest of my position. Had I not taken profit off right here, this would have been a huge loss. Okay, from 304 in full size down to 275, that would have been a big loss for me. This trade still hurt, was my biggest loser on the day, but it's a manageable loss because of that first take profit. Okay, when you guys are, the way that I scale out of my positions, I scale out in 3 tiers. When I'm right, I scale out in 3 tiers. When the stock gives me that first move, I sell 25% of my position. So if I had a 10,000 share position, I'm selling 2,500 shares. Then when I get like the breakout, that second move, then I'm selling 50% of my position. So if I had 10,000, I'm selling 5,000 shares, which means now I'm only left with 2,500 shares because I just sold 2,500 on that first move. Second move, I sold half my position, okay, half the original position. And then I hold on to one last piece, whether it be 20 to 25% of my position in case I do get really, really good follow through. Okay, so by taking 25% of my position off the table right there at the 200-day moving average on the daily, that saved me from losing more on this trade than I ended up walking away with. Losing trade regardless, but I would have lost more had I not taken that first tier off. And it's because I wanted to be prudent in front of that 200-day. I take you guys to the daily chart. This purple line on my screen, that's your 200-day. Right now, the 200-day sits at 313. It was higher than that earlier in the day. So when we spiked right through to 321, I took profit just in case we were not able to break through that high. I mean, that 200-day, the stock rolled over. Okay, so ended up saving me. Okay, that's the story of the day was tier trading saved me. I feel like I should make a song about it or something. Like that's the way that that kind of the day was for me today. But you know, that's why I teach this method, because the point of the tier trading strategy is to do two things. It's designed to help you keep your losses small, and it's designed to help you keep you in winning trades longer. Okay, that's what the tier trading strategy does. That's what it's designed for. Okay, I teach it to all of our members. It's available in the advanced course bundle on TrueTradingGroup.com. You only have access to those courses if you're a member, but it's one whole chapter. Okay, in the advanced course bundle is the tier trading strategy and how to implement it. All right, so saved my day there on PEIX. Next, AGRX. Okay, AGRX. This I use a tier trading strategy to help keep my loss small. Okay, sat in a tier 1 position. Okay, then we had a double bottom gap up pattern. This is a great pattern. I trade this pattern often. I'll trade it again tomorrow if I see it. Initial morning low on the gap up. We push higher. We pull back in. That initial morning low holds the trade line, 9 EMA. Okay, this trade line comes up into play, holds the stock up at the low, pushes it back, and then you guys can see VWAP acting as resistance right here. VWAP resistance, VWAP resistance. What I did was I went ahead and I got long a tier 1 entry right here, okay, at 96. I got long right there, tier 1 at 96 cents, risking down to the low of the day, which at the time was 87.5 cents. Call it 88 cents. So I'm risking from 96 down to 88. I did not enter full size at this point. I only entered tier 1. Tier 1, when I'm entering a position, tier 1 is only 25% of my desired position size. Just like when I scale out on the way up, when I'm entering a tier 1, I don't always enter tier 1, guys. Sometimes I just go straight to a tier 2. Like PEIX, I went straight full size when I got long at 304. Okay, depends on the setup, depends on the risk on the trade, depends on, the volatility of the stock. There's a lot of factors that go into me deciding if I'm going straight to full position or if I'm entering a tier 1. In the case of AGRX, I'm entering tier 1 because I'm far away from my stop loss. Okay, I don't want to be in full size at 96 cents, risking down to 87.5. That's too much risk for me to take on full size. So I enter tier 1 right there at 96 cents. I'll take it to my trade announcements. Here we are, long tier 1 at 96 cents, stop loss 88 cent area. I'll add tier 2 through 99. The reason why I'm adding tier 2 through 99, that's the trigger on this pattern. Okay, what you're looking for here with this double bottom gap up pattern is a high volume breakthrough VWAP. You're looking for this. Okay, you're looking for the trade line to continue to hold support, which it did here again, and then it did here again. You're looking for that to push the stock through VWAP with an increase in volume, and then you get that trade line VWAP crossover pattern to push the stock up through highs. If we got that breakthrough VWAP, I would have added to tier 2 and been in full size looking for a move back through the high of the day. We never got that breakthrough VWAP, so I stayed in tier 1 that entire time. And then you can see on this candle, when we broke through the low of the day, I exited my position on tier 1, taking a loss on the trade, but only in 25% of my position. Okay, so example, if you wanted to enter 10,000 shares of AGRX, tier 1 would have been 2,500 shares. and that means you would have lost on 2,500 shares rather than losing on 10,000 shares. Okay, so again, tier trading strategy helped keep my loss small on AGRX, helped keep my loss smaller than it could have been on PEIX. And again, I'm going to get into one more trade when I traded PYX. Tier trading again helped me keep my loss small. All right, so that was your AGRX. Now last, we'll get into this PYX. PYX, okay, we traded PYX yesterday. Okay, I caught a real nice move in PYX yesterday. I caught that move in PYX yesterday. Okay, it was on my watch list again today, gapping up well above yesterday's highs. And I said pre-market that, guys, I'm looking for PYX to hold support mid-gap and then eventually give us some continuation. The stock, I think, was heavily shorted off the bell, okay, and throughout the day. And what I noticed was this: 1, 2, 3. 3 times this stock found support at 45 bucks. Okay, right around, it held the gap up 3 consecutive times. So what I was looking to do was enter a tier 1 position as close to this low as I can, and then add to the position if we get above VWAP, because VWAP had showed me that this was an area, the VWAP was previously resistance. So I'm looking for a tier 1 close to the low, adding tier 2 if we break through VWAP. Okay, I'll take you guys to my trade announcements. Here we go. Let me zoom in. Long tier 1, PYX 45.82, stop loss 44. We'll add tier 2 through $48 area. Okay, that was the VWAP area, 48. That's why I was saying I'll add through the $48 area. So long at tier 1, 45.82. That is right there. There is my tier 1 entry, guys. Okay, right? I don't know why this square won't. Okay, right in here. 45.82 is my tier 1. Okay, I then added to tier 2 right there. We just got back above VWAP. The trade line's coming up, crossing over VWAP. I'm also looking, we're about to come out of lunchtime. Okay, so I was looking for volume to start to pick up in PYX, and my thought process was that whatever traders got short PYX in the morning would give up in the afternoon if we squeezed up towards highs, because they tried here to break the low of the day and they couldn't, and tried here to break the low of the day and couldn't. So I thought if we got back above VWAP, I thought the shorts would kind of give up and then we would squeeze ourselves up to the high of the day in the afternoon. That was my thought process. That's why I entered tier 1 here and I entered tier 2 right here. Once we broke back below VWAP, okay, I exited that tier 2. So that the tier 2, the piece I added to that position here, I sold that add here as we broke. It was actually more like down here. It's actually more like in here, where I sold the piece that I added. I sold right there when we got back below VWAP. Okay, and then as we just could not get back above VWAP, now we're into the afternoon session, and I'm thinking to myself, if we can't get back above VWAP soon, this stock's going to roll over. And as soon as I saw this candle right there, I exited my tier 1 position. Okay, right there is where I exited my tier 1 position. All right, so in tier 1, in tier 2, out tier 2, out tier 1. Okay, now had I entered full size right here and I never got that tier 1 entry, I entered full size right here, this becomes a much bigger loss than it was. Okay, so once again, the tier trading strategy allows me to enter a trade, go after a trade idea, be wrong on that trade idea, and still walk away not necessarily unscathed, because I took a loss on the trade, but I didn't get hurt. Okay, it was a small loss because of that tier trading strategy and that tier trading method. Right, and that's really what the day was all about for me. That's why, you know, I love the tier trading strategy. It has saved me many times from taking big losses, and it has kept me in winning trades way longer than I would have ever expected the stock to run. And it's something I teach all of our members, and that's the kind of the lesson of the day, all about tier trading. I'll see you guys in chat tomorrow.